Good evening, everyone. A very warm welcome to the 54th GST Council meeting decisions, clause by clause analysis, and recent critical developments in indirect taxes. I would like to introduce our speaker, Mr. Vivek Jalan, who is qualified CA, MBA, LLM, and LLB. He is the chairperson of the National Fiscal Affairs and Taxation Committee of BCC and I. He is the regular speaker of various professional forums on the key areas of direct and indirect taxes. During the session, please put your video and microphone off. If anyone has any query, please write it in the chat box. We will answer all your queries at the end of the session. Now I request Samir sir from VILGST to say a few words. Over to you, sir.
Amir, are you there? Samir, are you there? I think Samir is not there. Awake.
Sir, Samir sir is there, but is not talking about. So we can start.
Yeah. So I'll share my screen.
Yes, sir.
We request our speaker, Vivek sir, to take the session forward. Over to you, Vivek sir.
Just a second. Is my screen visible? Is my screen visible, Awake? Yes, it is visible, sir. Okay, yeah. So thank to all the participants first for joining in large numbers in this 24th Indirect Tax Colloquium. And as usual, we have tried to start on time. More participants would join going forward. Thank you to Samir from VILGST. I think there is a technical glitch in his system where we cannot hear him. So in absentia, thank you VILGST for partnering, and thank you Team Tax Connect for again making this indirect tax colloquium possible. I will go directly to the topic. Mr. Sambamurthy says he is unable to view the screen, but I think others can view it. So, I'm starting.
Your screen is visible, sir.
Visible. I think some of the participants cannot see the screen. So you have to check your bandwidth at your end. It is visible to the other participants, please. So I will go to the topic directly because there are more than 25 items which we have to discuss. Many participants are saying the screen is not visible. I'll stop the sharing and again share. Just allow me 1 minute. Is the screen visible? Avik and Pratyay, is the screen? Yeah. So now participants are saying yes. Yeah. So thank you for confirmation. And I will go directly to the topic of the 54th GST Council meeting, where more than 25 items have to be discussed, and many of them are very, very important for all the taxpayers. First, all of you have seen the press release, and we'll go on the analysis part on each of the item of the press release. But some is out of the press release and which has been in the media over the past 1.5 months, and which have been deliberated extensively at the officers level of the GST Council. Related party transactions generally under GST, and particularly in case of import of services by branch office. So we all had reports over the last 15 days, more than 39,000 crore rupees of demand notices under GST were served recently on various foreign airlines. In case of valuation and payment of GST on import of services in related party transactions. So what are these services? Say, for example, a foreign airline has an office in, say, Singapore, and it has a branch office in India. This branch office utilizes the brand of the foreign holding company or the foreign office. So the question is whether the Indian branch office has to pay GST on import of services of brand, copyright, etc. This is more or less one of the major transactions of services in related party transactions. And it is clarified in this press release also that in case of foreign airlines, the import of services by an establishment of a foreign airline from a related person where no consideration is involved. In that case, no GST would be leviable, right? So this was the clarification, but very importantly, as I said, out of the press release, one of the reporters during the press conference has asked the officers of the GST Council as to what about other industries, particularly what about IT companies. We have over the past 1 month also seen that on, for 5th or 6th of August, 32,000 crores rupees of demand notices under GST was served on an IT major in a similar case of GST on import of services in case of related party transaction, where full credit was available to the branch office in India. No consideration was involved, right? And the officers of the GST Council, CBIC, have clarified that such transactions of related parties, which has happened without any consideration and where full input tax credit was available to the recipient, that is the branch office in India, in such cases, it has already been clarified by circular in June 2024 that it would be out of GST, right? Possibly the officers were speaking about Circular 210 of June 2024, right? And this Circular 210, I have also quoted various, in various media platforms. There are some, Avik, is my video and my first PPT slide, import of services, visible?
Hi, Samir here. I think you were still stuck on the intro page out of press release. At least I cannot see the next slide if you've gone to that slide.
I have gone to that slide. Just
And
a second. Some are saying it is visible, some are saying it is not visible. Just give me, 30 seconds. I'll share again. Is it visible now, Samir?
no,
Import of services.
no, I cannot.
This
Yes,
is not
now,
visible.
now I can see it. And hope others.
Now I've changed the screen. Is it visible now?
Yes, it is visible now.
Just a second. Yeah. So now it's visible. Thank you. So officers of the the officers are very clear. The GST Council is very clear in all such cases that in case where related party transactions are involved and they happen without consideration, in such cases where recipient is eligible for full input tax credit, in such cases GST valuation would be as per Rule 28. And in case no consideration is involved, no GST would be applicable. Circular 199, which was issued in October, I think in 2023, that also held accordingly. So this, as per the GST Council, we understand is more or less fixed. However, certain field officers are differentially interpreting this, and the taxpayers need to take it up accordingly. Another issue which was in the media for long before the council meeting and which was clarified in the press release, thereafter in the post council meeting press conference also, it saw a lot of traction, was the services of institution where research and development grants were received by them. It is clarified first that in case it is a state or central government owned institution, university or entity, or in case such entity which is receiving the R&D grants are registered under Section 35 of Income Tax Act, where these entities are rendering services from such grants which are received either from government or from private organizations, then such services would be exempt from GST going forward. In case of earlier demand notices, they would be treated on an as is, where is basis. That is, in case of any university or institution who has paid GST, nothing would be done. In case those who are contending and litigating the matter would be dropped. The issue was taken up by one of the finance minister of one of the states or union territories before the council meeting, where she has held that certain Punjab University and other universities have received such a notice. And post the conference, GST Council meeting, in the press conference, the Honorable Union Finance Minister also has aptly clarified that it was she who has proposed on the directions of the Honorable Prime Minister that such universities or institutions should not be leviable to GST, and all the states have agreed. Going forward, it would also be a part of the GST laws. However, important to note is private institutions or organizations, universities, research associations would not be eligible for this exemption in case they are not registered under Section 35 of the Income Tax Act. So all such universities who want such exemptions or institutions, they have to go and get themselves registered under Section 35(1). In hindsight, in our pre-budget meet with the North Block officials in the Ministry of Finance, each and every one of us from trade and industry has represented on the reinstatement under Income Tax Act under Section 35 capital A and B of the Income Tax Act, 35AB. And it was taken note of by the Ministry of Finance, but they were very clear that in income tax, they would not reinstate that exemption. But there is a fund of research and development of 1 lakh crore, and industry can use that fund of 1 lakh crore for research and development. Therefore, we understand that the intention of the Ministry of Finance is very, very clear, that they want to promote research and development. They are pumping in a lot of money in the country's research and development, but there would always be a tracker, there would always be an audit of the grants received and the money spent in the correct way. Therefore, the GST has also moved in that way. In case you need such exemption, then you need to register yourself under Section 35 and follow the procedures thereof. Next issue, which has seen a lot of discussion over the last 1.5 to 2 years, and we have also represented before the various states as well as the CBIC. Many of the trade associations, other trade associations have also represented, and a welcome move for the steel industry, the lead industry, other metal industries, specifically the manufacturers, where the supply of metal scrap has been brought under reverse charge mechanism under GST on and from a date which would be notified going forward, apropos the recommendation of this 54th GST Council meeting. So let us understand what is this reverse charge on metal scrap, right? So what was the issue in metal scrap? We all know, not from now, but even from the central excise and VAT days, the entire metal scrap chain, if you start the metal scrap chain, it starts with a aggregator. It starts with a person who collects the metal scrap, aggregates it, thereafter supplies it to level 1 dealer. Level 1 dealer supplies it to the level 2 dealer, and possibly the level 2 or level 3 dealer supply it to the manufacturer, right? So in every supply chain, in the metal supply chain, there is an aggregator who collects all the metal scrap from various unorganized sector. Aggregator supplies to dealer 1, then dealer 2, and then possibly the manufacturer gets the metal scrap. what these manufacturers are doing, the person from whom they are purchasing, that is in my example, the dealer from whom they are purchasing, they are ensuring that these stage dealers, they are what is reflecting in the manufacturers to be, etc., etc. Now, what is happening in the dealer 1 level, the dealer 2 who are supplying to the manufacturers, they are also ensuring that the dealer 1, that is the supply chain before them, they are also compliant with GST. But what about these scrap aggregators? Are they complying with GST? So what we are seeing, the scrap aggregators, the level 1 dealers who are either unregistered or registered. If they are unregistered, no problem. But if they are registered, right, then the issue is that they sometimes are evading GST. They are not complying with the GST norm. Now, from the aggregator, the department goes to dealer 1, then dealer 2, who naturally are mere traders, do not pay the GST on the default of the aggregator, and finally it comes to the manufacturer, and 122 1A section of the CGST Act has been inserted where the department alleges that the manufacturer is the ultimate beneficiary and he has to pay the GST to the government. Now, what they have recommended, the GST Council, is that let us bring the reverse charge under RCM, right, for the supply of metal scrap. Even in case, in my example, the aggregator, he is unregistered. From rupee 1, this dealer 1 who is registered, he has to pay RCM from rupee 1. In case from dealer 1 to dealer 2, where it is a B2B transaction, then TDS at the rate of 2% needs to be deducted by the payer of the for the metal scrap, right? So two things, from aggregator to the dealer 1, unregistered to registered, dealer 1 pays on RCM from rupee 1, number 1. Number 2, from B to B, registered to registered, in such case, TDS at the rate of 2% would be applicable, right? So in this way, the supply chain can be tracked with this 2% TDS, and the aggregator to the dealer 1. In such case, the RCM is paid and the risk of evasion by the aggregator, that is no more prevalent. This we understand from the minutes of the press release has been from the press release minutes. This is what the modus operandi which has been decided, right? So what is the compliance which needs to be done by the trade and industry? Number 1, those people, the trade and industry which is purchasing this metal scrap, first of all, first thing to be done now is to take GST, TDS registration. Because when you are making the payment, you need to deduct GST, TDS, and mind that this TDS would be state-wise because it is GST, TDS, right? Number 2, the suppliers for whom the TDS is deducted going forward, they need to accept this TDS and avail a credit of this TDS in their GSTR 3B returns. So for some time, possibly for 1 month, from the time when TDS is deducted to the time when the TDS shows in the supplier's GST return, till such time, the working capital of the supplier of this metal scrap may be blocked, right? So this we have explained in the modus operandi in the PPT, which would be shared with you. However, this is subject to the final notification. The GST Council press release is very, very succinct and very, very brief. This discussion was on the basis of such press release only. Next big issue, 3 issues on taxabilities of composite supply under GST, right? So 3 issues with respect to taxabilities of composite supply. Number 1, real estate. Taxability of preferred location charges. Number 2, transport agents. Taxability of supplies like loading, unloading, etc., which are ancillary to GTA supplies. Number 3, taxability of meter reading, meter changing, billing charges, etc., supplies which are ancillary to transmission and distribution of electricity by discoms. So these are the 3 issues which are clarified. We'll discuss them one by one. However, many of the industries, very recently, around 1 week back, I got a call for one other issue, a major issue which would be going forward, maybe investigated, where composite supply was an issue, right? And what happens in case of composite supply? I will over here, we will discuss first what are the principles of composite supply, right? Which you need to keep in mind. And thereafter, we'll discuss these 3 issues. So, under section 2, subsection 30, composite supply has got 5 criteria. It is a supply which is gendered by a civil person, number 1. It will inculcate supply of goods and services or both. Number 3, these goods and services supplied simultaneously should be naturally bundled. Number 4, these goods, services or both should be supplied in conjunction with each other. And number 5, one of these supplies has to be a principal supply. A principle has been defined under 2 subsections 90 of the Act. It is the dominant. The Honorable Supreme Court, if you go through this famous judgment of Mohit Minerals in para, I think 143, the Honorable Supreme Court has also said that the problem in GST implementation is because the taxpayers or the officers, they are still in the service tax and VAT regime. They think that GST is a combination of service tax and VAT. But GST has also become a composite act and it has to be read accordingly. So these 5 principles have to be seen where it is a composite supply or whether it is not a composite supply, right? In this, the most important thing to see is whether these supplies are naturally bundled and are rendered in conjunction to each other. So in case of, say, a hotel industry, and it has been described in the CBIC flyer also, it has to be seen from the service recipient's point of view. When you go to a hotel, you assume that the hotel will naturally give you laundry services also. So, and the supplier of services, generally every hotel will give you a laundry service also. And this laundry and the room rent service, this will be bundled when they are supplying together, right? So normally in normal business parlance, majority of the hotels will give you both the service, room rent as well as laundry service. Therefore, this becomes a composite supply. right? This is the clarification or the example which is given in the CBIC circular, right? Now, let us put these 5 principles in preferred location charges charged by a builder to a customer in case of sale of property during the construction phase, right? So what is preferred location charges? In case you want to buy a swimming pool facing flat, or you go to a mall and you want to buy a shop under construction, which is facing the lobby. Or if you go for an industrial plot, you want to buy an industrial plot which is closer to the water supply, so that you don't have to spend money in, pumping in the water, right? So these are preferred location charges. Number one, it is supplied by a builder who is a taxable person. Number two, there are construction services and preferred location services which are supplied in conjunction to each other. Number three, generally they are bundled together. A person who purchases a plot, property, etc., he would go, and when he is purchasing the plot or the property, he would purchase the PLC services also. A PLC service can only be supplied when you are purchasing the construction service also from the builder. In my example, so it is supplied in conjunction with each other, and the principal supply, which is rendered by all the builders, is construction services. So 5 criteria of composite supply are fulfilled, and it has been held accordingly by circular number 177 of 2022 on your screen. It was clarified earlier also abundantly. If you go through this circular, we'll share this PPT with you. It was clarified. In 2022, same year, the Honorable West Bengal Advanced Ruling Authority and the Haryana Advanced Ruling Authority, they also have accepted this same argument that PLC charges are a part of construction service and should be charged at the same GST rate of 1%, 5%, 12%, as the case may be. They should not be charged at the higher rate of 18%. However, the department in West Bengal went and appealed against this AAR before the AAAR. And the AAAR in West Bengal has held the reverse. And what did they say? They said, no, 1% or 5% or 12% GST rate has been determined for construction services by giving a 1/3 discount for land. Actually, the rate is 1.5%, 7.5%, or 18% on construction services, but 1/3 abatement has been provided for value of the land, right? And therefore, just because in the rate you give a abatement for value of the land, it was held that the supply itself does not become a composite supply of construction services. Same was held by various other advanced ruling authorities. Now it will be clarified that by a circular, I am sure that PLC charges would be taxed at the rate of construction services, 1%, 5%, 12%, as the case might be, right? So this is a welcome move, and real estate can rejoice this to an extent. But as we all know, one circular creates 3 more confusions. with the field officers. So let us see how and in which form the circular comes and how and in which form it is interpreted by field officers. Now, GTA, in case of GTA services, very recently a case came to me from one of the GST jurisdictions, and person who was an actual GTA, he was denied the GTA rate of 5% or 12%, and the order was issued on him uh, with the argument that he is a non-GTA and 18% GST was demanded. So if he was paying, say, 5% on RCM, 18% was demanded. Why did this happen? Right? So I reviewed the case, and it was seen that possibly during the representation, the Bela Bailey contract issue was not discussed before the officers. What is Bela and Bailey? So you have to go to the Contract Act, and the GTA services, we are a pure Bela Bailey contract. The GTA does not own the goods which it carries from one person to other. It holds the goods as a Bela, right? That what is the evidence of that Bela Bailey contract? It is a consignment note which is validly issued. So if you issue a valid contract note, if you prove that it is a Bela Bailey contract, and if the GTAs invoice as per the consignment note, and they charge for all their services on the invoices, they have agreements accordingly, these issues may not be disputed by the department. But many of the times, GTAs, sometimes being unorganized, the smaller ones at least, what they do, they charge a GTA service and raise one invoice on RCM. In the other invoice, they say temporary warehousing, they say packing, unpacking, loading, unloading, transshipment, etc. and do not charge GST. The recipients, in case it is a RCM, what the recipients do, they do not pay GST on anything, assuming it is a composite supply. And now the demand is raised on the GTA saying that, gentlemen, these services are not GTA services. So the council has clarified that in case consignment note is issued by GTA, in case the services of packing, unpacking, loading, unloading, and even, and mark my words, temporary warehousing are is supplied in conjunction with the GTA services, then it would be considered as a composite GTA service, right? And better still, in case the services are charged in the same invoice, then it would be considered as a composite GTA service, right? And the GTA rate of 5% or 12% would be charged accordingly. Now, the issue is, of course, this is a welcome move and would be a welcome circular. But the issue is, for past periods, there is no mention of treating it as on as is various basis. So on past periods, in case you are a recipient of GTA service and there is a demand on you, right? So if you have not paid the RCM on this packing, unpacking, loading, unloading, etc., there was a demand on the GTA on FCM. Now there is going to be a demand on you on RCM because you should have paid RCM on it. So all the recipients who have joined this webinars, I would request you all please go through all your GTA bills. In case you find in the last 7 years you have taken any GTA bill, you have any GTA bill where they have started packing, unpacking, loading, unloading, etc., and you have not paid RCM on it, please pay it off and take the input tax credit as may be eligible. You would ask me a question that, Mr. Jalan, you have told this, but what about interest? Of course, interest question will come, but please go through the amendment under section 13 of the CGST Act, which would be notified going forward, which has been enacted apropos this budget, while Finance Act number 2 of 2024, read with the Supreme Court judgment in the case of Jet Airways for revenue neutrality. And I can tell you there might be a case for contending that in case of RCM payments, even if the payment has been done today and input tax credit taken on the self invoice as per 31(3)(f), then no interest shall be liable, right? So I'm giving you a lead. However, this needs to be further analyzed in case you have such an issue. Now, third, composite service. And this is much more simpler, but something where I feel the GST Council has to take back its own words, take back this circular 34 of 2018, which was issued in 2018, right? On your screen, you can see the extract of issue number 4, which has been clarified in circular 34 of 2018. The issue is the transmission and distribution companies for electricity, that is DISCOMs. The transmission of distribution of electricity, that is exempt under GST, not liable to GST, right? However, application fees for release connection of electricity, rental of meters, testing fee of meters, transformers, labor charges, duplicate bill issue charges, and other charges which are supplied by these DISCOMs. What about the taxability of such supplies? In the circular 34 of 2018, it was held by the GST Council and the government that these supplies, even if rendered as a composite supply of transmission and distribution of electricity, would be taxable under GST. The Honorable Gujarat High Court, in the case of Torrent Power Limited, has held this and set up this circular to this extent as being ultra vires the GST Act. Similar decision was held by the Honorable Delhi High Court in the case of BACS Rajdhani Power Limited, right? And the matter went up to Supreme Court. The department challenged it in an SLP before the Supreme Court. To the extent I'm aware, the Supreme Court has not held on this matter till now. However, it needs to be further checked. Notwithstanding, the Honorable GST Council has recommended just against this circular 34 of 2018. They have said all these ancillary supplies by DISCOMs would be exempt. That is, they would be treated as a composite supply of transmission and distribution of electricity and would be treated as exempt, but those DISCOMs who have paid GST, paid, gone. It would be treated on an as-is, where-is basis. So, relief to the DISCOMs, but those who have paid, apropos the litigation, nothing much can be done. Of course, this circular to this extent is expected to be rescinded ab initio. GST amnesty schemes. Two GST amnesty schemes have been enacted by Finance Act number 2 of 2024. First is the waiver of interest and penalty for the first 3 years of GST on payment of tax. The procedures, rules, forms, all of this would be inserted by Rule 164. So the detailed procedures, while an SOP would be issued, all the taxpayers should be now ready with a list of the cases wherein they would like to go under the amnesty scheme. The start date of the amnesty scheme would be 1st of November 2024. Because we all know that anything under GST which is enacted by the parliament has to be passed by 50% of the state legislatures. So by 1st November, they are expecting that 50% of the state legislatures would pass the Finance Act to this extent. And the last date of payment under this amnesty scheme would be 31st of March 2025, right? Now, few points over here. And you can go through my video in this regard on YouTube. While this scheme is only for order show cause notices under section 73, even if you have a 74 order, all hope may not be abolished or destroyed. You still have hope. In case you have a show cause or an order under section 73, and you can further get an order contesting the issue of allegation of fraud, willful misstatement or suppression, then, and if you get a section 73 order consequently, then you can go with this 73 order under this amnesty scheme. Also, recently we have seen a very perverse order, right? Very perverse. So what we are doing is we are going to the High Court to try to get this order remanded back. And in the department, try to litigate this and get the demand amount at a reasonable level and thereafter go under the amnesty scheme. So all hope, friends, is not lost. In case even if you have a 74 or a perverse order, try to see in case you can still avail of this amnesty scheme. Because the government is very clear, they do not want such a huge list of disputes. More than 1 lakh cases, we understand, would go to the tribunal when it is formed. And every day it would keep on increasing. And what we understand, the GST tribunal still has 2-3 months to come. So such a lot of cases, it would take 3 years to even get to, at par. And in 3 years, another 1 lakh cases would pile up. So the government is very clear. They want to reduce the amnesty as the litigation as much as possible. A very important thing. Now, say for example, you have a notice or an order under 16.4. That is the limitation period of ITC. You all know that under 16.5 and 16.6, the orders under 16.4 for limitation period of ITC for the first 3 years, they are also getting waived off. So input tax credit, the last date for 3 financial years, 17, 18, 18, 19, 19, 20, the last day of taking input tax credit becomes 20th of November 2020, right? However, say if you have a show cause notice with this, wherein you can go under 16.5, 16.6, but you have other points also where you want to go under 128A amnesty scheme. So what you would do first, under 16.5, 16.6, you need to get your show cause of order rectified. and that has been held by the 54th GST Council also, that 16.4 waiver scheme for limitation of ITC would be through rectification of order route. So first get your show cause or order rectified. Thereafter go under this amnesty scheme under 73. So you can get full relief. Now, very interestingly, if you see the minutes of this 54th Council, right? Yeah, it is November 2021. This last date of availing ITC for 3 years after the 16.5 and 16.6. Now, if you have a, say, show cause notice, right? If you have a show cause notice, then you can get the rectification order under 65, 66, 16.5, 16.6. If you have a order by the adjudicating authority, then you can get the order rectified. If you have a appellate order of the first stage appeal, then you can get the appellate order rectified. Avik, is my audio clear?
Yes, sir. Yes, sir.
Clear.
Yeah.
Okay. Now, very important, please note, if you have an order which you have appealed against and the case is pending with the first stage authority, in such case, I'm talking about 16.4 cases. And in case few of our clients who have this issue, right? Please note, where your order is pending before the first stage authority, order under 16.4, you have to get this order disposed of under the with the first stage authority, at least to the extent of 16.4, and get the order confirmed for the other issues. If you want to go under 128, thereafter only you will be allowed to go under 128A waiver scheme. So if you have, say, a order under 16.4 and other two issues, which is at the first stage, and 1st November comes, after that, for availing the benefit under 128A, you have to withdraw that appeal. But what to do about 16.4? In case you do not get it disposed of at the first stage, then you will not get full benefit. If you want full benefit, get that first stage, appeal which is pending disposed of to the extent of 16.4. Thereafter, for the other points, withdraw the appeal or the order and go under 128A. I suppose it is clear now. Next issue, big one, which is litigated specifically in the Mumbai High Court and the Gujarat High Court. Many cases under section Rule 96, Sub Rule 10. Now, I will tell you how we have litigated this issue, because as per my understanding, whatever High Court cases which I have seen and those which have been filed, what I understand, one important point has been missed. First, I will refer to the council decision. So what is Rule 9610 read with Rule 89? It states that in case, say for example, you have imported the goods under advance authorization, then you have taken the exemption or not paid IGST and compensation cess. Now, when you are exporting the finished product, you cannot take a refund on payment of duty. Clear? But mind my words, you cannot take the refund on payment of duty, but you can take the GST refund under the LUT route without payment of duty. Right? Now, many of the taxpayers, they could not bifurcate a advance authorization import as well as the other imports. And for those goods, raw materials which you have imported by advance authorization without payment of IGST, that also they have exported with payment of GST. And the GST department has issued show cause notices. Many of the taxpayers have paid interest penalty and also paid back the refund. Recredit of the ITC, of course, is made or would be made going forward. Right? This is the case under Rule 9610. So the council has said going forward, this Rule 9610 would be deleted. And what we understand, subject to the notification which would be issued, going forward, prospectively, even if you have made the export with payment of duty, it is your input tax credit which you have got a refund of. And therefore, you can take the refund on payment of duty on such exports. But for the previous periods, what has happened in these 7 years, the council has said, gentlemen, take your bill of entry where you have imported with advance authorization, pay off the IGST and compensation cess with interest, and thereafter we will regularize your GST refund. But the interest itself in this case would be such a substantial amount, almost equal to the tax demand. If you see the case of Cosmos Industries in Cosmos Films, in the Gujarat High Court, and many other cases, they have already paid off the tax or the interest. But what about if you contest on the interest? We have contested on the interest. Why? Friends, if you go through Rule 96, Sub-Rule 4, which comes before 9610, even in case you apply for a refund on payment of duty and the commissioner finds that the on payment of duty refund should not be allowed to you, he will refer it to the jurisdiction and write Rule 96 Sub-Rule 5A. The application for refund on payment of duty through the shipping bill, that becomes converted into RFD1 refund without payment of duty under LUT, and that has to be processed under Rule 96 Sub-Rule 5C. So in my legal submission, even the law, Rule 96(4) read with 5A and 5C, requires the commissioner to convert this on payment of duty on a refund without payment of duty and to get it disposed of as if it was a application for refund without payment of duty. Where the commissioner has not complied with this, now this refund on payment of duty under the GST Act cannot be disputed. My further submission is, even if it had to be disputed, when the refund process has achieved finality by the issuance of a refund order, the department has to contest it at the first stage. It has to contest the refund order which is issued at the first stage rather than reopening of the refund case. So these are my submissions for the earlier 9610 cases, right? Next, two issues relating to place of supplies for OIDAR services, online information and database access and retrieval services. Two services. If you go under section 2, subsection 17 of the IGST Act, online internet advertising and cloud computing come under OIDAR services. And under section 13, subsection 12 of the IGST Act, in case of OIDR services, the place of supply is the recipient's place of supply. So in case a person in India is rendering online advertisement services for, say, a person in Dubai, and the Dubai person is making a payment to this Indian party, right? Then it will be treated as export of services for the Indian party, Indian supplier of internet advertising or cloud computing services. Now, where is the dispute? If you go to explanation to 1312, it's in clause D of the explanation, it says, where the internet protocol address of the recipient, this Dubai party, is in India, then the place of supply would be India. That is the place, the address of the recipient would be considered in India. Now, where is the interpretation gap? Many field officers, in our view, are taking the view that, say, this internet advertisement services or cloud computing services, this Dubai party is rendering to somebody in India. Indian service provider who is providing advertisement services, Dubai party who is receiving the advertisement services, the actual consumer of the advertisement or cloud computing services is in India, IMP address in India. Then whether place of supply would be Dubai, considered as export, or India. Many field officers are saying since the final consumer's IP address is in India, then the place of supply would be India. Possibly this is the issue on which the council would clarify that the place of supply would be the Dubai party's IP address, that is Dubai or UAE in my example. However, let us wait for the clarification to come in. Input tax credit on demo cars. So the car dealers, say a Hyundai dealer, Hyundai has given him a demo car for test driving. Now this dealer of Hyundai, Coupling Motor Car Private Limited, he capitalized this car in his books of account, used the car for test driving, and therefore thereafter further supplied it back or forward. Clear? Whether the input tax credit on this demo car would be available or not. That is the question. The West Bengal AAR, in the case of Toplink Motor Car Private Limited, Maharashtra AAR, held that ITC is available under section 17(5)(a), capital A of the CGST Act. However, Haryana AAR, in the case of BMW India, had held the reverse. And now it seems that the council would clarify that ITC on these cars, demo cars, would be available. However, let us wait for the final clarification to come in. Right? And friends, please also note, we would have another webinar on 20th of this month to clarify and to further discuss on all the notifications and circulars apropos this 54th GST Council meeting. So whatever I am discussing now, we will discuss it then after the final notification comes. Now we are only discussing on the minutes of the press release in the GST Council. What has happened? GST on film distributors and sub-distributors, there was a confusion till October 2021. If you see on my screen, if before October 2021, these film distributors, if they treated the service as licensing, it was 12%. If they treated it as leasing, it was 18%. In October 2021, the clarified and services on film distribution or sub-distribution would be 18%. But what about before October 2021? Now the council has clarified and they will come out with a circular or a notification to regularize October 2021 cases on an as-is where-is basis. That is, those distributors, sub-distributors who have paid 18% gone. Those who have paid 12% litigated, their issue would be regularized. Renting of commercial properties would come under RCM, where it is rendered by unregistered person to registered person. So a registered person who is taking a rent of commercial property from an unregistered person, he has to pay RCM and take the input tax credit to the extent available to him. Affiliation services provided by CBSE, ICSE boards, right, and such other boards would be taxable under GST. However, affiliation provided by state or central education boards to government schools would be exempt. Affiliation provided by universities to the colleges would be taxable under GST. This would be clarified. And now, the most important and critical issues for all the taxpayers. Three major procedural changes which will impact all of you, and it would be live from October 2024. Invoice management system, RCM ledger on the portal, and B2C e-invoicing on a pilot basis. We will discuss all these three, right? So what is invoice management system? Now when the supplier files his GSTR 1, right? Then it comes in your GSTR 2B, right? And thereafter you follow circular 170 and categorize as a temporary or permanent reversal or take the input tax credit. Now there would be a intermediary invoice management system, right? It would be a live system. As and when the supplier files his GSTR 1, it would auto-populate in your invoice management system. You have to accept, reject, or keep an invoice pending. After the 14th of the month, all of these would flow to your GSTR 2D and you can further amend, etc. till the date of filing your 3B. However, this advisory itself we feel is contradictory because on the one hand it says that from 14th till filing of 3B date, you can amend the invoice management system. But on the other hand, it says, see, after 14th, all the data from your supplier will directly flow to your 2B. So to this extent, we feel it would be a hybrid system. Till 14th, invoice management system. After 14th, GSTR 2B. But let it finally, take final shape. Something which is more critical on this. So from October, it would be live. Right? Now, again, the advisory says that you need to accept only genuine and authentic invoices, which are eligible for input tax credit. So in hindsight, we feel that somewhere the advisory is not in consonance with Circular 170. Even we feel you have to accept the ineligible ITC and thereafter permanently reverse it as per Reverse Circular 170. However, again, it will take final shape. In case the supplier amends an invoice in the same month, then you would take the amended ITC. In case he amends it in the next month, then you have to take the amendment accordingly. Two, ITC would not flow to your IMS, it would flow directly to your 3B. That is the ITC on RCM and 16.4 on EOS cases. Now, most critical thing is this on your screen. You cannot mark as pending any credit note. So if you get a credit note from your supplier on your IMS, you have to either accept or reject it. You cannot keep it pending. If you accept it, you have to reverse ITC. If you reject it, then supplier has to not reverse its GST liability. If there is an upward amendment of a credit note, then you cannot keep it pending. Again, if you accept, reverse ITC, reject, supplier has to not reverse its output tax liability, or there would be a demand. If there is a downward amendment to the credit note, if you have rejected the original credit note, then naturally you have to reject this amendment also. If there is an amendment to the invoice or debit note, which is downward amendment, then you have to or the supplier has to realign the GST liability according to your acceptance or rejection. So friends, this is very, very critical. All your credit note RECO has to be done, and practically it is impossible to do it on a live basis, because say if a credit note has been issued, and most of the credit notes by the suppliers are issued on the last date of the month, even after 2-3 days they are issued. So if till the time you do not receive the credit note or the amendment to the credit note, you have to keep it pending. If you reject it, then supplier would be put to notice. If you accept it, then department will come to you that you have accepted and why have you not reversed the corresponding input tax credit. So this is a very, very critical area, credit notes. We all know Circular 212 and Section 15.3, where the reversal of the corresponding input tax credit is demanded by the department from the recipients of the GST credit notes. So very, very critical, this invoice management system, and all the taxpayers, all of us have to work on a yesterday basis to implement it in October 2024. Now, if you keep a lot of, so basically, we feel that we'll have to finally see what happens. We feel that whatever you have rejected, rejected. There is no amendment opportunity. What you have rejected, that you can finally re-accept it, right? Now, this is a very critical issue. And if you have a lot of pending invoices in your IMS, then also you can be put to notice that, gentlemen, why you have so many pending invoices. Also, generally the recipient is at the mercy of the supplier in GST. Here, we see the supplier would be at the mercy of the recipient. Now, what happens in a case where you have supplied genuinely, charged GST, the recipient wants to forward supply in cash, and he rejects the invoice? Will the department not issue you a show cause that you have supplied the invoice, you have made a fake invoice, right? So all of these issues, this may come in after this invoice management system is implemented. So we feel that now somewhat, it would be a balance, and now suppliers would also be at the mercy of the recipients. B2C e-invoicing would be on a pilot basis now and would be implemented going forward. However, so now even for consumers, you may have to do e-invoicing going forward, right? So naturally, just like foreign countries where VAT is charged, so here GST would be charged. You have to give, if you are a foreign resident going back to your country, then on the airport, you may get a refund of the GST paid in India. But certainly you have to give your passport number or some such evidence wherein it can be tracked. Also, the consumers, there would be certainly a utility on the portal wherein the consumer, they would be able to track that this e-invoice for B2C, this has been genuinely generated and GST is paid accordingly to the government. So generally, in case of B2C transactions, we have seen across that there are many frauds wherein some of the unscrupulous suppliers, they supply on B2C, charge GST, pocket GST, but do not pay to the government. This B2C e-invoicing tries to plug this. However, for the small and medium taxpayers, even for the larger ones, we understand that there would be additional compliance. RCM liability. Last year, this time we saw a reversal statement, right? Now we see an RCM liability or ITC statement. So you need to put in the opening figures of ITC or of RCM. That is, what is the RCM you have paid under table 3.1.d of GSTR 3B, and what is the ITC on RCM you have taken under 4A2 of 3B on import of services and 4A3 other RCM ITC. So in case you have paid under 3.1.d less than ITC you have availed under 4A2 and 4A3, you may get a show cause notice. Therefore, you have to put in the opening balances by 31st of October in this statement. Very, very critical date. Please do not violate it, because if you do not put in the opening balances, then you might get a show cause notice, because there may be a negative balance which would be put in. However, be careful, and after you put in also by 31st of October, you will get 3 chances of amendment by 30th of November. So please, by 31st of October, put in the opening balances in your RCM liability statement. If you have a negative opening balance, 100% you will get a scrutiny notice. So be careful and calculate your opening balance as well. The opening balance would be for financial year 23-24 at till 31st of July 2024. So do the reconciliation in 2 parts. Till for 23-24 financial year, you need to report in 99C of 23-24. So accordingly, you need to reverse or settle the differences for 23-24 by 30th of November 2024. Some amendments in the GST rates. So namkeens expanded savory products like bhujia, bakers products, etc. That GST rate is reduced from 18 to 12. Cancer drugs, certain cancer drugs, GST rate reduced. Even customs duty was reduced in this budget, if you remember. Roof-mounted air conditioning for railways, GST rate has been increased from 18 to 28. Important is car and motorcycle seats for automobile industry. They would be charged at a higher rate of 18 from 18 to 28%. So aircraft seats 5%, car and motorcycle seats 28%, bicycle seats at 18%. This is how we understand from the council minutes it would be going forward. Transportation of passengers by helicopters were on a seat sharing basis. If you take a helicopter solo, then 18%, other seat sharing 5%. Flying training courses by DGCA would be exempt, right? Life and health insurance, which was widely discussed in the before the council meeting, that has been referred to a group of ministers, and rightly so, because we understand that they would reduce the GST on life and health insurance from 18 to 5, but it would be for the individuals, may not be for group Mediclaim. The issue also remains whether ITC would be available, not available. So there are many facets to this other than what has been politicized. Therefore, they have rightly referred it to a group of ministers. And if there is a broad consensus that the GST has to be reduced, but it will be done in the next November 2024 council meeting. So the next GST council meeting will be in November 2024. That has been more or less announced. So friends, thank you very much for this, and we will take all the questions now in the chat box. Just too many messages for voice breaking, etc., etc. Okay. So Mr. Sunil has asked if the goods are sent to a related party and invoice is not raised. As per Rule 28, when goods are supplied to related parties, value would be determined on the basis of open market value. However, second proviso to Rule 28 states that if the recipient is eligible for full ITC, then the value declared in the invoice will be deemed to be open market value. In the above case, the invoice was not raised, so we can take the support of Rule 28. See, invoice has to be raised. Otherwise, you would be violating the provisions of Rule 46 and Section 31, where a supply has been rendered without raising an invoice. But the value would be determined with the related parties and the consent of the related parties. If the value is nil, then as per Circular 199, the nil value needs to be accepted in our legal submission. Okay, Nibedita Shah says if the GTA charged 18% on loading and unloading in the same invoice. So if the GTA is charged load 18% and if you have taken ITC and paid to the GTA, then I don't think there is much which needs to be done. However, if the GTA has not charged anything, then 5% would or 12% he would need to charge if he is on FCM. If he has not charged anything and if it is on RCM, then my submission is that you need to pay on RCM at the rate of 5%. Mr. Suresh Gupta says, in case interest is paid, is it refundable? I mean, if you are talking about GTA service, no. If interest is paid, I feel it is gone. Okay. To claim amnesty scheme, JC appeal is demanding 10% mandatory deposit. How can we keep this appeal alive as they may reject the appeal without 10% mandatory deposit? See, Mr. Jha, why are you resisting from paying 10% pre-deposit? If you have to go for the amnesty scheme, you have to pay 100%. So you pay 10% pre-deposit, keep the appeal alive, and then withdraw it and pay the balance 90%, right? So the JC appeal is right, saying that where the appeal has to be kept alive, it has to be with 10% pre-deposit, right? So please pay off. Otherwise, there would be trouble. Received orders, Mr. Iyer says, received order under section 73, but interest and penalty not waived because of notification not released by the council. Yes, of course. So you have got the order under 73. File the appeal with the first stage if the time barring period is nearing. Thereafter, withdraw and go under amnesty. But please file the appeal. Do not violate the provision wherein you do not file the appeal, because in case the first appeal is time barred, then you might get into another legal tangle saying that the order now is non-est. So please file the appeal within the time limit. Mr. Sunil says if there is not sold similar kind of product in domestic market, then under 89.4, how would we calculate the export turnover for claiming the refund on unutilized ITC on account of export of goods without payment? Yeah, valid question, Mr. Sunil. We had the moment, I remember this had come in 2020 when the Rule 89.4C, I think, was first introduced. It was Corona period, and we also put it up before the government. Till now, we have not received a reply, but then in case like item are not available, then your value has to be accepted by the department. That is our submission. Okay, Mr. Gaurav says, as per the council minutes, IMS is not mandatory from 1st of October. See, the council minute says taxpayers would be given the IMS will allow the taxpayers to accept, reject the invoices. This is expected to reduce notices. They have not said that it is not mandatory with effect from 1st October. I think they have said that B2C e-invoices would be on a pilot basis. But IMS, we understand, would be mandatory going forward from October 2024. Mr. Shah, so Shah and Shah says whether credit note can be amended downward once credit note is accepted by the recipient. Yes, of course. Why not? Table number 9 of GSTR 1 allows that. What happens if the recipient rejects the invoice? So to nullify, the supplier has to issue a credit note. Yeah, very good question. And if the supplier issues a nullifying credit note, the recipient has to again accept it. Or if he does not accept, then it would be deemed accepted if nothing is done. The question is whether if he rejects the invoice as well as the credit note, then what would be the fate with the supplier? That again is a question which I have put forward, and the GST department, of course, would come to the supplier and ask him as to why the recipient has rejected the invoice and thereafter why he has rejected the credit note. So I think this would IMS would open the doors of more questions from the GST department going forward. Can you share the PPT? Yes, we would share. Okay, Mr. Fernandez says we have paid interest for 17, 18, 18, 19, 19, 20. Can we apply in the upcoming amnesty scheme? So, so what I understand, Mr. Fernandez, you have paid the interest but not paid the penalty. So whatever interest you have paid, you will not get a refund. But of course, if you go into amnesty for the penalty, then you will get a amnesty for penalty. But interest paid, now gone. There are so many cases. In fact, there were memes in the social media. And in fact, we have seen a case where one of the taxpayers, he had paid the tax amount of more than 30 lakhs just the day before the 53rd council meeting. And, it was a big taxpayer. They didn't want to go into dispute. And now there is no option. Mr. Bharat says how to take the benefit of the amnesty for case under appeal for multiple issues, ITC 17, I think 16.4, you mean 16.4 short output. So there would not be an amnesty case wise or issue wise. It would be show cause or order wise. So if you have an order, as I said, for 16.4 and other issues, 16.4 you get it rectified, and for the balance issues you have to go under amnesty for the entire consequential order. Mr. Tas says if the basic demand is paid voluntarily, can amnesty avail for interest and penalty also? Yeah, very good question, Mr. Das. You can go through my video on the YouTube also on this regard. We had put it up before the senior officers of the GST. They have clarified, and we understand that the ensuing rule 164 and the other circulars and forms would clarify, even if you have paid the base tax amount, you can avail of this amnesty for merely the interest and penalty amount. We had put it up and we had said that, see, if you do not bring this under the amnesty, then we have to resort to ask the officer to make a 10 rupee demand of tax and then go under amnesty. So it would be brought under amnesty, I think. Can SEZ take refund of the tax paid for hotel accommodation? No, this needs to be further seen. The question is not very clear. What we understand is you have an SEZ and the SEZ is a supplier of certain goods or services, and the employee of the SEZ goes to a DTA, takes a hotel accommodation, right? In such case, the place of supply would not be SEZ, and thereafter we do not feel that the ITC would be available. Okay, whether IMS would supersede cumbersome credit note compliance introduced after last council meeting? Yes. So, Mr. Ravindran, you are right to this extent. The IMS would actually negate the issue of 15.3, wherein we need to take a declaration whether the counterparty has reversed the ITC or not. You are right. To this extent, it is a blessing. Mr. Bharat says whether under IMS, whether we can keep the invoice under abeyance due to timing difference in accounting books to subsequent period. Yes, of course. You can keep the invoice under abeyance in IMS. You can keep it pending for the timing difference. Yes, Mr. Haldar, PPT would be shared. Mr. Sarangi says, we are facing dispute in transitional credit. Is there any chance to appeal under GST amnesty scheme for transfer of the same? Very good question, Mr. Sarangi. The rule 164 would further clarify. We understand to the best of our knowledge and whatever we have got from the council till date, the transitional credit issues might also come under the amnesty under 128A. But let's wait for these rules and forms to be further issued and notified. Okay, last question from Mr. Sunil Sharma. There is one function available on portal in the name of communication before the taxpayer. Please provide your inputs on it by reading it to IMS. Very, very good, Mr. Sharma. Very good question. Now, IMS is, of course, one, it is very limited to accepting, rejecting, or pending, keeping the invoices pending. But communication with the taxpayer is a much more, elaborate function. You can talk about anything and everything, on earth. And you can ask them whether, POS, say, if your supplier has done a issue in the POS, it will directly flow to a 3B. You can ask your supplier to rectify the POS. So the communication with the taxpayer, this is much wider utility than this IMS. Agarwal, this is the last question we are taking. Do we have to take TGS registration for every state for metal scrap RCM? Yes, from the council press release, we understand that for every state for B2B transactions on metal scrap, taxpayers have to take TDS registration under GST and do the compliances accordingly. So thank you very much, everybody, for this patient hearing. I think we have clarified and discussed on many of the issues. But as I said, let the final notifications or circulars be issued. And on 20th of this month, we are going to hold another webinar with VILGST and Bengal Chamber of Commerce on threadbare discussion on notifications and circulars. Thank you very much for joining. Samir, over to you.
Thank you, Vivek. Thank you for this detailed session. We have covered most of the queries. That there was one last query that I feel that come very end of the session. So if you have the time, you can just take it. There's one last question pending. If you can see that.
Yeah, sure. Which one is the question?
Something to do with registration or something.
Oh, regarding GST registration where biometric authentication is required. So biometric authentication, yes, they have come out with a new advisory. Biometric is now going live across all the states. Yes, I understand it is an issue for the authorized signatory to go and do a biometric, but that is the norm going forward. Thank you very much.
Thank you, Vivek. Thank you so much for your patient answering all the queries that was put in the chat box. And we'll hope to continue in the next session when the notifications and other clarifications are issued. Thank you to all the participants for joining us. We'll see you again in coming time, maybe within 15-20 days. Thank you, Vivek. Thanks, everyone. Thank you.
Thank you.
Thank you, Vivek sir, for this wonderful deliberation. Thank you, Samir sir from VILGST for coordinating with us. Thank you all the participants for attending the webinar. We conduct such webinars every month and we hope we will get you in the upcoming webinars as well. We will shortly share PPT and video link to all the participants. Thank you all once again.